Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 12th, 2025, and we're diving into VNET's latest earnings report. VNET, a leading internet data center services provider in China, has just released its unaudited financial results for the fourth quarter and full year of 2024. Joining us today is John, Senior Analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. I'm excited to discuss VNET's performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. VNET reported total net revenues of $307.8 million for the fourth quarter of 2024, marking an 18.3% increase from the same period last year. John, can you elaborate on the key drivers behind this growth?
Absolutely. The significant growth in VNET's revenue was primarily driven by their IDC business, which saw a 28.3% increase. Notably, the Wholesale IDC segment experienced a remarkable 125.4% growth, reaching $91.1 million. This surge is largely due to the increased demand for high-performance data centers, particularly from AI-driven sectors. Additionally, VNET turned a net income of $35 million this quarter, a substantial improvement from the $2.42 billion net loss in the same period last year.
Operational efficiencies and future outlook. VNET's operational efficiencies seem to be paying off, with an adjusted EBITDA of $98.8 million and a margin of 32.1% for the fourth quarter. How is VNET achieving these efficiencies, and what does their future outlook look like?
VNET's focus on operational efficiencies is evident in their improved EBITDA margin, which rose from 23.2% to 32.1% year over year. This improvement is largely due to cost management and a strategic focus on high-margin wholesale IDC services. Looking ahead, VNET is optimistic about 2025, projecting revenues between $9.1 billion and $9.3 billion, driven by continued demand for data center services and AI advancements in China.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 33 cents for VNET, but the actual EPS came in at 0.001. John, what are your thoughts on this discrepancy and how might it affect investor sentiment?
The EPS miss is certainly a point of concern, as it fell short of the forecasted 33 cent. This discrepancy be attributed to higher than expected costs or other operational challenges. While the revenue and profitability metrics are strong, the EPS miss might temper investor enthusiasm in the short term. However, VNET's strategic initiatives and market position could mitigate long-term impacts.
CFO Insights. Let's discuss the insights from VNET's leadership. Josh Sheng Chen, the interim CEO, highlighted the AI-driven demand as a significant growth factor. Meanwhile, CFO Qiyu Wang mentioned that their full-year results exceeded expectations. How do these insights shape VNET's strategic direction?
Josh Sheng Chen's emphasis on AI-driven demand underscores VNET's strategic focus on capitalizing on emerging technologies. The CEO's confidence in the market's growth potential aligns with their expansion plans. CFO Qiyu Wang's comments about exceeding expectations highlight the success of their wholesale business as a key growth driver. Together, these insights suggest a strong commitment to creating long-term shareholder value through strategic investments and market positioning.
Key takeaways. In summary, VNET has demonstrated robust revenue growth and profitability improvements with a strong outlook for 2025. However, the EPS miss is a notable concern. Thank you for joining us, John, and thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on VNET's performance in the comments below.
Thank you for having me. It's been a pleasure discussing VNET's financials. Looking forward to seeing how they capitalize on their strategic initiatives in the coming year.